Okay, so good morning once again, everyone. This time we're going to be doing, yes, we're identifying our trend origin. We already identified our zones on the weekly and daily, as well as our trend lines on the weekly and daily. Although we didn't have any valid trend lines that we could draw on the daily time frame. I mean, we have a trend line we can draw like this, but that trend has already been broken. Oh, hold on. Okay, so this is something that I actually talked about in the last video. You can see that this trend line price went like this. It bounced first, second time, so you have a valid trend line. Third time, you could have taken a trade, but then this trend line was broken. The price came to the back of the trend line. So that's what we call diagonal support and resistance level. Diagonal support and resistance level is actually trend lines. It's a different way of looking at trend lines. Anyways, I digress a bit from the topic now. So trend origins. What's the trend origin? Based on the name, trend origin, it's not hard to guess. Trend origin is the point where the trend begins. It's the origin of the trend. But to put in a little bit more detail, trend origin is the point at which price switches from an upward trend to a downward trend, or from a downward trend to an upward trend. So we can see that price movement was strongly bullish. We even have a trend line representing it. You can see that price was strongly bullish. Let's look at something like market structure. Price kept going like this. But then after getting to this point that we've circled this with a red box, you can see that price started tanking after. Price came here, broke the level, and then has continued downward. So this becomes clear that this region is our trend origin. And we just happen to have also marked out our market structure. Yep. So now let's draw it out. The swing highs and our swing lows. So this is a bearish impulsive or our lower low. This would be our lower high. Lower low is the lowest. The lower low is the lowest point that price gets to before switching from an impulsive to a correctional move. While the lower high is the highest point that price gets to before switching from a correctional to an impulsive. The English and grammar is, maybe I should have closed this door, kind of noisy. The English and grammar I'm using is really not so important. Once you start practicing these things, it will essentially come to you quite naturally. You might not even be able to remember the name while in practice, but you always know exactly what they are. So this is our lower low. This is the lowest point that price has gotten to. What makes me count this point as a lower low? Because there's been a strong retracement from this level. But even though there has been a strong retracement from this level, we do not yet have a lower high. That is to say that price is still in the midst of a correctional move. Not only that, we can even draw a trend line. This is a daily trend line because we're still on the daily. Oh no, I apologize for that. This is a daily trend line because we're still on the daily time frame. So that's it for this video. We've identified our trend origin. We've marked out our higher highs and our lower highs and our lower lows. So the next thing for us to do is to do a little bit of real price study to get a good view of what price is doing.